Thank you very much for having me. Delighted to be here. When we say development, I believe that you might be talking about transaction monitoring. Um, so, on the one hand, you still have payment ledgers that need to be settled between banks and financial institutions at the end of the day. However, with the advent of faster and instant payments, we're seeing transactions moving so incredibly quickly. I remember seeing the transaction monitoring system of a Chinese payments powerhouse, who basically centralized and built real-time transaction monitoring across all of their payment rails. So we're looking at international payments, domestic payments, WeChat payments, mobile banking payments, and it was extraordinary. But what ended up happening was they expended so much energy, like actual consumption of energy, and so many false positives were spit out that they basically had to shut the system down while they came up with a new approach and essentially building a risk-based approach to try to define which payments needed to be processed and which payments needed to be looked at, and then building additional technology on top of that to try to automate the risk-based approach, all of which is incredibly challenging. Now, real-time transaction monitoring is valuable, very valuable. I personally have loved it when my bank has stopped fraudulent transactions from going out of my account. But if you're thinking about $100 million payment and the societal impact that a fraudulent or an illicit payment can have, then that's pretty, it's pretty essential that that's in place. So yes, in summary, real-time transaction monitoring is, I think it's going to be affected, but I do think we need to move beyond rules-based transaction monitoring, and maybe look at more behavioral type of transaction monitoring with AI supporting it, and maybe some network analysis built on top of that to actually be able to cope with the advent of faster and instant payments. If we look at Europe under the Fifth Money Laundering Directive, which had to be implemented in January of 2020, it was the first time that you could share intelligence within a group structure of companies. So companies that were ultimately owned by, one entity or group of shareholders. Before that, you couldn't share information or intelligence on suspicious activity. So I think we're still a bit of a ways off, which is unfortunate. We do have informal networks of information sharing that exist. So basically, I'm talking about one MLRO having coffee with another MLRO and maybe talking about their kids or talking about something else. And then we also have the advent of formal public-private partnership structures that are emerging. But again, even within those structures, it's very difficult to share sensitive or even personal information. So what you get is kind of a very high level exchange of typologies and red flags and the like. But like I said, I think it is essential that we have cross-country collaboration. And I mean, maybe we can start in country and then go cross-country to build trust and then kind of recreate the model on a global basis. Because it's not possible to tackle a stateless, nameless enemy in silos. Everybody has a piece of the puzzle and it somehow has to come together. We have the technology available for this. There is zero knowledge proof. I'm going to use the example of Sadici because I understand it, whereby you have computational puzzles speaking to other computational puzzles to confirm that the same data is held by two institutions and entities. But the legislation is a long way behind, and I think we just need to get the law to allow for this stuff to happen. To detect money launderers, I think the banks, the fintechs, the mobile banking providers, and whoever it is that does their due diligence or KYC are best placed to deal with the actual people and entities themselves. To detect money laundering itself, so actually the illicit flow of funds, I think we need key actors in the international and domestic payment systems who see the messages, who actually see the flow of transactions, or who see the messaging of transactions and should be able to detect illicit payment corridors a lot more easily than the banks are currently able to do so. So I'm talking about the SWIFTs of the world, the Pan-Africa Payment and Settlement System, SEPA, even BACS domestically, or in the US, ACH. And I know that they are communication providers, and it's a little bit controversial that I'm saying this. And they engage with the regulators, but they don't have any obligations with regards to reporting of suspicious activity, or suspicious kind of or illicit financial flows. But again, they're the ones who can who have a global view. And until we kind of bring them in a little bit more closely, I don't think it'll still be a challenge. It'll still be every bank detecting that tiny little transaction going from one entity to another entity without actually seeing this full view.